This video will cover price delivery, which is also called the IPTA cycle. Let's look at the elements of price setup. We have four fundamental components that are the foundation upon which the interbank price delivery algorithm is built. The first one is the consolidation, which is also called accumulation. Then we have expansion, we have retracement, and reversal. Let's start by looking at consolidation. Consolidation occurs when price is not willing to leave a particular range and we see price moving sideways. This is a sign that price is in a consolidation. For expansion, that is the breakout, is when price moves quickly from a level of consolidation. And this happens when you see price leaving a fair value gap and also another block, which also gives us an indication that smart money is about to reveal their intended move in the market. For retracement, when price come back into the range after expansion, it is called a retracement. And after each retracement, we'll see another expansion. When we move further, we'll look at more examples on these concepts. For reversal is when price completely turned from being bullish to bearish. This happens when price sweep liquidity, break structure, turn completely. Before we go on the chart to identify these four price delivery, let's look at some rules for you to use whenever you come across this price delivery. The first one is consolidation to expansion. This tells us that when you have a consolidation, you should know price can expand from consolidation, and when that happens, you'll be left with order block and fair value gap. The second one is expansion to retracement. Price can expand and then retrace, which means that when you have an expansion, you can't be expecting retracement. And when price is retracing, price is coming into a discount PDRA when price is bullish, or a premium PDRA if price is bearish. The next one is price can move from expansion to reversal. Mostly in reversal, price will seek liquidity and price will reverse. The next one is expansion to consolidation, which means that when price expand, you can have a consolidation. Now, if you look at here, we have these are some few rules that tells us what price don't do in the market. The first one is price don't move from consolidation to retracement. When you see price is moving from consolidation to retracement, then you are going to have an AMD. The next one is price don't move from consolidation to reversal. When you see this, mostly price is just going to seek liquidity and trap traders for an intended move. So here is what price can do and not do. When price appears to move from consolidation to a reversal, it's often a trap. This setup typically leads to an AMD reversal pattern. Once price transitions from consolidation to expansion, only two outcomes are possible. Expansion to reversal. This results in an AMD reversal pattern. The second one is expansion to retracement. This leads to a return to an order block or a fair value gap, forming a continuation pattern. Here is how price moves from expansion to reversal and expansion to retracement. In this depicted diagram, we see that the order flow is bearish, but at the external range liquidity, we see price consolidating, and then price failed to enter into the external range liquidity. Now price expand into the external range liquidity. Now this from high here to this low is an expansion bearish. But after the expansion, price creates a reversal. Now we say the rule is that price can move from expansion to reversal. Now this is an example of expansion to reversal, and this leaves us with AMD. Now the next one is that price can move from expansion. We see price has turned because reversal is made to change direction of the market, and we see price has now turned from bearish to bullish. And this price turning to bullish, we have a new expansion from this low to this high. Now what are we expecting? Price can now retrace from expansion to retracement. When price retraces back into the range, the next move will be an expansion. And here we see price expanding from this low to this high. And also we see a consolidation because based on the rule, price can move from expansion to consolidation. And when we have a consolidation, we should know that price can never reverse from consolidation. Price can do two things from consolidation. It's either price retreats from consolidation or continue expanding from consolidation. And here we see price retreats from consolidation, which gives us an AMD. How is it an AMD? We have consolidation, retracement, and we have expansion, which is distribution. Now, when you see price expanding, we should know that price can consolidate, price can retrace, or price can reverse. Let's see what will happen next. We see price creating a reversal. How is it a reversal? Because we see price coming into an institutional reference point, which is internal range liquidity. So let's go to the chart and identify this price delivery and see how we can use it in forming our bias and also in trading the market. So here we are on the chart and we have this consolidation here because we see price is in the range. Price is actually at this range between this high and this low. Now price has created an expansion. Remember we said price can move from consolidation to expansion. And whenever you see an expansion, that means smart money is willing to reveal their intended move. So an expansion will leave you with order blocks and fair value gap. Now we have this consecutive down close candle as the order block, and we have a fair value gap. So let's mark these order blocks here, and we have a fair value gap that price has created as a result of the expansion. So now we see price creating a retracement, and when price will retrace, price will come back into a fair value gap or another block. And what do we have? We have a fair value gap here, and we see price coming into the fair value gap. Now from retracement, we can have an expansion. Here is an expansion because price take out this high, and we see retracement back into another block. Here we have another block and we see price coming into it. Then we see another expansion, a retracement. Now that is how you should follow the price action. We see an expansion, we see another retracement back to another block. Yes, this down close candle. We see price coming into it. Then we see another expansion, bullish, yes. And we're seeing another retracement. Let's see whether we have a reversal because price has been expanding. So we see price creating a consolidation because we see price is in the range. And where is the range? From this high to this low. We see price is in a range. And we see when price is consolidating, price cannot reverse from consolidation, but price can retrace from consolidation or expand from consolidation. We see now price from this consolidation, price expand. We did not see any form of retracement or reversal. Now, had it been we had a reversal, we would have gotten AMD, but now we see another expansion. And when we see expansion, price will leave us with other blocks. Yes, this other block, and also fair value gap, and we can see fair value gap in the price. So we see price is creating more of expansion because we see a tiny retracement here and expansion again, bullish. Now we can see price is likely to consolidate. Oh yes, price consolidate, and we see another expansion. So this is how you should follow the price action and follow the price delivery, and also ensure that this informs your trading.